Thank you for clicking into this webcast for the fund DNB Global Energy. This will be the last webcast of the year, and I'm here with the fund's manager, Ms. Lill Aafos. And Lill, it's natural to start by asking you, we started out this year with a rather bullish view on the oil price. So close to the year's end, what could be said about the oil price this year?
Yeah, firstly, I have to say that going into 2012, we were quite bullish on the oil price, and indeed it has stayed high. Despite the fact the European economy and the world economy as such was very weak and still is weak. But the reason behind our bullishness was the fact that the supply side was and is constrained. And also geopolitics has played an important role and still is. So when it comes to the international oil price benchmarked by Brent, we do still believe it's going to stay high, though volatile, but stay high despite the weakness in the economies. But this time I would rather talk about the dual oil market that we have seen evolving over some time, whereas you have the international benchmark as I just talked about, but also a new local market evolving in the United States, where there is an export ban on oils, which means that the growing production, because going into 2013, the US is the only country where the production still is growing. Elsewhere, it's more lackluster. But the oils within the United States need to compete for each other and compete with the same buyers who are represented with the refiners. And especially the US Gulf Coast refiners are going to benefit from this theme, as they might buy cheap internal oils and sell the products like diesel at international prices. So going into 2013, yes, we are bullish on oils, but more especially on the international oil, which means that oil service companies linked to the international markets, like the world leader special pipes producer Tenaris, was a 2012 winner and is going to be so for 2013, together with one of the world's leading equipment providers, Cameron, who delivers equipment to subsea construction, will also benefit from the international price, whereas in the United States we do favor refiners like Valero, which is placed on the Gulf Coast.
For a global energy fund, the oil price is obviously interesting, but a lot of things going on this year as well in the natural gas markets. Can you elaborate a bit on the natural gas markets for us, Lill?
Indeed. We have before talked about three gas markets, and we still do so. And the gas market we have favored and still are favoring is the liquid natural gas market, where you cool down gas to minus 160 degrees and then transport it to the best buyers. So in Asia, people have been buying gas at 4 to 5 times higher prices than the price you can obtain in the United States, where again the abundant shale gas production with no export facilities means that the gas too is in a way landlocked. There are some projects coming for exports by 2015 and beyond, but it's not material, at least not yet. So those having liquefaction capacity is still going to benefit from the gas theme, that is Shell and BG, for instance. But a new theme we are seeing evolving is actually the American gas market, where we now see a few internal US gas companies that has brought down their costs to such an extent that certain areas of the United States, if you like, are today profitable. And also with Obama re-elected, we think that the demand side will be favored by Obama buying gas instead of coal, for instance. So yes, gas first and foremost, LNG, but slowly we are seeing signs of the revival of the US gas markets.
Lill, you finally just recently came back from your last trip to Latin America. there's an awful lot going on in Latin America as well. What are your main takeaways from your last trip, Lill?
Indeed, this is actually the third trip I did to Latin America in less than 18 months. And for every time I go, I get some more and more bullish on the Colombian markets because firstly, the framework is favorable for investments in energy. And secondly, the government is attracting international investments to the country. So one of the winners this year in our portfolio has indeed been a Colombian name called Gran Tierra, and they are still going to do well, I think, into 2013, growing their reserves and growing their production together with other companies, of course, active in the country. We also have said before that we are very favorable of Brazil longer term, and that's still valid, but short term there's so much government intervention in the production and in the economy as such, so we prefer Colombia, but still a very valid theme. So to conclude, we do like international priced oil service companies represented with likes of Tenaris and Cameron, and we do like US Gulf Coast refiners represented with the likes of Valero, and also companies related to the growth theme in emerging markets like Gran Tierra in Colombia.